Investors have a simple dilemma. How do you make money? And what does it mean to make money? Well, how do I outperform the cost of capital? If we look at the performance of a bunch of assets, and this is most assets over the last 14 years, what you can see is that, investing in a bunch of things don't even beat the CPI, but there are a number of things that will beat the CPI. I mean, your typical diversified portfolio, your stocks, your real estate, et cetera. But the question is, what's the real benchmark for an investor? And I don't think it's the CPI. The CPI is a very synthetic metric, which is cherry-picked by a bunch of government-paid economists in order to be the lowest possible measure of inflation. If things get too expensive, they throw it out of the CPI. A much better measure would be the monetary inflation rate, or the expansion of the M2 money supply. And it turns out that the expansion of the money supply very, very closely tracks the performance of the S&P index over 100 years. And when you think about it like that, what you realize is that when you invest your money in the S&P index, you're not making money. You're just not losing money. If you were rich 100 years ago and you held a diversified portfolio of stocks, you're still rich. If you bought a bunch of currency or bonds, you're poor. And you can see here over the past 4 years, the S&P or the monetary inflation rate looks like about 13%. And not many things beat that inflation rate. It's very, very difficult. In fact, if you're beating that hurdle, you probably beat it with big tech. You beat it with Apple and Amazon and Google and Facebook, because the best idea in the 21st century has been buy a big tech digital monopoly like a Meta or a Microsoft, somebody that's that everybody needs, nobody can stop. And if you bought it before people understood it, you're probably doing okay. And even after they understood it, you're probably okay. But diversification generally is selling the winner to buy the losers. If you diversified out of Amazon, you lost. If you diversified out of Apple, you lost. If you diversified out of Microsoft into any of the 100,000 other business software companies, you lost. And why is that? Because in the modern era, if you can establish a digital network which goes to 1 billion people, it's got such a crushing economic advantage that it's unlikely that anybody else is going to be able to catch up with it. And Microsoft is proving that today, so many years after it was founded. Now, the question is, what's the solution? Is Bitcoin the solution? Well, the last 4 years, Bitcoin's performance is 46%. It's totally crushing every other asset class and every other idea. And it's definitely beating the rate of monetary inflation. This is a chart put up by Bitwise yesterday. This is the last 14 years of Bitcoin. As you can see, the top performing assets, the top of the chart, Bitcoin is winning the investor Super Bowl 11 out of the last 14 years. If you're paying attention, you got to wonder, like, why is it winning? And is this a gimmick? Now, the advocates of Bitcoin, such as myself, who wear orange ties, we think that Bitcoin is the first perfect money. We think Bitcoin is paradigm shift. We think Bitcoin is the singularity where science collides with economics. We think you have to rethink economics. You have to rethink capital. You have to rethink money. You have to rethink business. You have to rethink corporate finance. That's what we think. And that's why we're winning. We think there's a fundamental technology shift here. There's a fundamental paradigm shift here. And we think we're going to keep winning. We think Bitcoin is digital gold. We think it has all of the virtues of sound money, none of the vices of physical gold, which was that barbaric relic. There's a lot of problems with gold. We think that Satoshi got rid of, engineered out all of the problems and just kept the good stuff. That's what we think. What do the skeptics think? Skeptics of Bitcoin think it's too good to be true. It's money for criminals. There's no use case. It's too volatile. It's backed by nothing. The government's going to ban it. It's going to be obsolesced by the next yo-yo coin, or it's going to be hacked. And we hear this over and over and over and over again. And if you ignored something that's won 11 of the last 14 years, either you didn't know about it, or maybe you thought one of these concerns was enough to keep you out of the asset. In my experience, everyone is against Bitcoin before they're for Bitcoin, including me. And my journey from skeptic to believer. This is my public utterance on December 18th, 2013. Bitcoin's days are numbered. It's just a matter of time before it suffers the same fate as online gambling. Government's going to ban it. This is by the way, that's what I thought when Bitcoin was about $100 a share, or $100 a Bitcoin. When Bitcoin was $10,000 a Bitcoin, 100x later, this is what I thought. Oh my God, I have seen the light. Bitcoin is going to change the world. It's unstoppable. It's growing exponentially smarter, faster, and stronger. Now, this is the Bitcoin journey. And everybody goes through this journey. You're born a denier. It's tulip bulbs. It's a scam. This is the Peter Schiff. You're born a Peter Schiff. Maybe you stay a Peter Schiff. 1 hour is enough to be a skeptic. After 1 hour, you've learned just enough to hurt yourself. In 10 hours, you think, well, maybe it's an asset. I think I'll trade it. I'm going to buy it cheap and sell it when it's expensive. And then I'm going to buy it back cheap, and I'm just going to arbitrage something this way and that way. After 100 hours of study, of thinking about it, you become an investor. This is a digital monetary network. This is like Google for money. This is Facebook for money. Facebook for rich people. You know, Rupert Murdoch never brought 100 million friends to Facebook. When Rupert Murdoch buys into Bitcoin, the billionaire brings billions with them, right? The trading idea is not that complicated, and the investor ideas, it's the next big tech network. It's a digital monopoly for money. After about 1,000 hours, you become a maximalist. And a maximalist this is an ethical imperative. The world's a better place with this, right? The money's broken. The world is broken. Billions of people are suffering. Fix the money, fix the world. That is the Bitcoin journey. Bitcoin represents the digital transformation of energy. Apple's digitally transforming photos, and Google's digitally transforming books, you know, and Amazon digitally transformed the storefront, and NVIDIA is working to digitally transform intelligence. But what does it mean to digitally transform energy? Bitcoin's the discovery of digital energy that can be programmed by a computer and channeled through time and space. Okay, that's a lot to wrap your head around. There's a lot of applications with digital energy. What does it mean? It means something conservative. It means that I've got $1 billion worth of something and I can move it anywhere else in the universe or hold it for 1,000 years and it's still something, right? We haven't figured out how to do that until Satoshi. What's the most lucrative application of digital energy? It's the digital transformation of capital. Now, you could think of it as, oh, I own some real estate, I own some bonds, I own some money, I own some currency, I own some equity, I own some art, I own some gold. But the real question is, why do you own this stuff? And it's divided into two categories. You own it because it's got utility. You want to look at the art, you want to live in the building, you want to hang out in the yacht, you want to fly the aircraft. Maybe you need the currency for working capital to operate your bakery or your manufacturing plant. Maybe you have your money in coal or oil or some other feedstock. So that's one reason to have assets. And the other portion of this is just long-term capital. I'm just storing value. It's a rich person that has a bunch of money and they don't know what to do with it, so they buy something. right? Whenever you hear about a billionaire that bought 16 expensive houses, you're like, well, they can only live in one. Why do they keep buying things? Well, because they think it's a better investment than just putting the money in the bank. So when you think about the world that way, you say long-term capital, store of value. Well, that's half the money in the world, or half the wealth in the world, $450 trillion. Bitcoin represents the transformation of our capital from financial and physical assets to digital assets. The first law of money says L equals V divided by M. The lifespan of an asset is equal to the value of the asset divided by the maintenance cost of the asset. If you buy a $10 million yacht and you spend $1.5 million a year to maintain the yacht, your $10 million is gone in 6 years, right? Your money, the useful life of the yacht is 6 years. You're not going to stay rich buying and investing in yachts or, fill in the blank. If you buy a house in Miami Beach, you're going to pay as much in taxes as the house cost you within 20 years. It's not a store of value. When you start to apply this formula to all these assets you can put your capital into, you realize that some of them have very short useful life. The Argentine peso won't hold your capital more than 2 years, nor will the Turkish lira. The US dollar might hold your capital for 10 to 15 years. You invest in stocks, maybe 25, bonds, not more than 30, diversified mutual fund, the S&P index, you're still getting diluted by that. So all of these financial assets have a useful life, 10, 20, 30 years. And why? Because of all these risk factors. This morning, the news is Apple gets a $14 billion tax bill. Oops. The next news is Google gets fined $2.5 billion by the EU. Oops. Torts, taxes, war, crime. Oops, maybe there's a tariff that's going to interfere with your trade. Think about all the risk factors when you're buying a financial asset. Hyperinflation, right? Maybe you suffer from a new regulation. Oh, it's just illegal to do what you do. Oops. If you invest in a stock and read the 10K, there's 20 pages of these risk factors. I am an expert on these risk factors. We came public in '98. Our company must have published hundreds and hundreds of pages of risk factors. So there must be hundreds of thousands, maybe millions of pages of SEC filings on risk factors. This is the dilemma of storing your capital and equity if you're an investor. So what do wealthy families do? They run to physical assets. And they invest in what? Probably not yachts and Ferraris, but maybe gold or paintings or land. Land is everybody's favorite thing, but land gets taxed at 1% a year. The average property tax rate's 1.1%. And that means it's gone in 91 years if the property value doesn't get assessed up. When the government assesses the property value up, they tax your land away from you in 30 or 40 years. You don't own it. You're renting it. When you buy a Bitcoin and you even put it in cold storage or put it with a custodian, you're paying 10 basis points. The first law of money says you divide the value of the asset by the maintenance cost. So something divided by 10 basis points lives 1,000 years. This is the longest duration financial or longest duration asset the human race has figured out, right? We've invented. Bitcoin offers the benefit of holding that building, but without the liabilities of a conspicuous, immobile asset. So what do we do when we digitally transform the building? Well, first we strip away all the bad stuff. No tax, no traffic, no tenants, no torts, no trouble, no mayor, no weather, no corrosion, no regulation. Strip away all the bad stuff and then add the good stuff. It's invisible building. Right? No one's going to hate you, resent you, and want to take your wealth from you because they walk past your big building every day. It's invisible, it's indestructible, it's immortal, it's teleportable, it's programmable on a computer, it's divisible, it's musical. I promised one musical reference. What do I mean? You can vibrate the building at 10 kilohertz. You can vibrate the building 10,000 times a minute, 10,000 times a second. I can move it 87,000 times on variable frequencies on a weekend. I can construct a symphony with the Capitol. Why don't you try to move a real building once a second? What about A440? Try to move a real building at 440 hertz. You can't do it. This is something that you can actually manipulate in a harmonious fashion on the frequency of the economic universe. And it's fungible. You own a $100 million building in New York City. It's not like a $100 million building in Tokyo. $100 million of Bitcoin is like $100 million of Bitcoin in Tokyo. Everybody understands what you're getting, and it's configurable.